Good morning, afternoon, or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be another jam-packed, especially today, cryptocurrency market update. If you are new around here and finding yourself on my channels for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And of course, that is what we are going to be doing today. Now, Friday was a frightful one and Saturday was a scary one. And we're going to be talking about that. We're going to start things off with what took place yesterday. Now, I am not a geopolitical guru or reporter or anything, but what I am is a follower of the news. I stayed up very late last night with my Patreons actually reporting all of this and taking a technical look at the markets to kind of give us some sort of a benchmark of where we were in regards to the storm that was taking place. We're then going to be zooming out and we're going to be looking at the charts and we're going to be looking at the lay of the land in regards to the crypto space and where we currently find ourselves because crypto really bore the brunt of what took place yesterday. We also saw some very interesting moves with Pax Gold, which is a gold derivative, if you will, that basically trades over the weekend that we're going to be talking about. It's a crypto kind of gold-backed token that did really well on the back end of this. And this is very interesting given what we covered in yesterday's video in regards to the fiat systems fighting back, and likely that being why Friday was pretty bad and pretty negative for risk. Because as gold started to rally, and remember their system is a debt-based system and gold is essentially an anti-fiat, it's a opposite to their system. I believe they were kind of trying to bring things back in line and kind of not let things run too far away from their fiat systems, which is a debt bond-based system. We're going to be talking about that because there is some really interesting things in regards to actually what took place on the paper market. When gold went on its rally, we saw a lot of volume come in as people tried to not let that rally get too out of hand. That was obviously Friday. It really leaned on risk, certainly Bitcoin being the highest beta of that. And then Saturday, we saw what took place yesterday, late last night. And we're going to be talking about all of that. And then we're going to be playing a clip of Larry Fink from a while ago, the largest asset manager in the world, actually talking about what's going on here with crypto and talking about that flight to safety, that flight to an alternative. And again, this is very interesting that we're making this video given what we looked at yesterday in regards to the fiat systems fighting back. And somebody likely knew what was coming. That's why there was such interesting moves in the markets going into it. To be totally transparent, this is not something that I predicted. Yes, we are forming that right shoulder for the total 2. However, that's still got to form. And we said, okay, there was that small pattern that got invalidated on Friday, so we knew that wasn't going to play out. We are still very much in standing. And really what we want to offer today is a steady hand in a rough sea. You need to learn to dance in the eye of the storm, ladies and gentlemen, certainly when it comes to the cryptocurrency space. And this is where you make your money as a cryptocurrency investor. It's not a nice ride, certainly given yesterday. But if you understand the broader context, our macro view on things hasn't changed in the slightest. And technically, when we assess the markets, which we're going to be doing with you guys today, we're still very much, in my opinion, in good standing. So let's start things off. Now we've sort of introduced everything. And let's start things off with what took place yesterday. So Iran launched drones into Israel. Now, we are having reports this morning that over 90% of those drones were essentially shot down, diverted. However, it's the act of it that is significant. And both the US and the UK actually stepped in and helped divert some of those drones. There are reports that it wasn't just Iran. There was Yemen and Syria that were potentially also involved. I really do not know. Again, I'm not a geopolitical reporter. What I am is a marketeer. What I am is a technical analyzer and investor. And I understand the repercussions that that's had on the markets. And crypto really bore the brunt of it, being the only market that was kind of open over the weekend. And actually, there is a gold market that we're going to look at. Gold did very well on the back end of all this and then got hit hard again. We're going to talk, there's a lot of really interesting things to get into in this one and that we're probably going to be talking about the remainder of this week. And I don't want to go too conspiratorial because I don't think it's helpful at this point. I think really what's helpful is focusing on what we know, focus on where the markets are at, and focus on the plan that we have that we set out in these daily market updates. And has there been any abbreviation or change of that? That's what's important to me, and making sure that message gets across to you guys. And we are going to get into some really interesting things. So that's what happened yesterday. Of course, the markets really got hit hard as a result of it. We're going to bring up a naked chart. Let's do Bitcoin as the kind of god market of crypto. So this is the Bitcoin chart. And the reason that we use a logarithmic chart to do our assessment, certainly on the macro timeframes, is because it quiets the chart right down. If we take it off log, it doesn't look still that bad, okay? And one thing that I want to point straight off the bat is, to me, I still believe that crypto is in an uptrend regardless of this news. Yes, some altcoins got hit particularly hard, but it very much mirrors what happened in the prior cycle. And actually that capitulation event, which was March 2020 in the prior one, really led things to get rocking and rolling. And the amazing thing is lots of altcoins actually still have not invalidated those lows that see them in an uptrend and still are likely to respect the structure that we have in place. But we can cover that in a second, and we'll get into that when we look at the total too. So this is Bitcoin off log. So considering what took place yesterday, it's my assessment that if this was going to lead to catastrophic escalation, the markets would have moved significantly more, certainly Bitcoin. It was the altcoin markets that got smashed. My reasoning behind that is due to low liquidity and a cascade of deleveraging. That's how this space goes. You get people too overly zealous. By the way, guys, a side note, we always say to people, and I think yesterday and Friday was a perfect example, I don't believe retail, and I'm retail, by the way, but you know, I'm somebody that does this for a living, should be trading with leverage in the cryptocurrency space. I don't say that to be a dick. I don't say that to be obnoxious and act like I'm better than everybody. I say that because I genuinely give a shit about you guys on the other end of the cameras. I know people far better traders than I am and have a far better track record than I am that got wrecked over the weekend. And we all heard that Pepe story, that guy that had $1 million of Pepe that was 3x long and he lost everything. Essentially, I don't want that to be the case with anybody. When we break things down, and this is the exact approach I take with my patrons, is we are spot long. We don't need to introduce leverage because of events like what took place yesterday. This is crypto. Any kind of leverage. The beautiful thing about yesterday and why we could keep a degree of cool, we still have all our cryptocurrencies and we are still actively looking to accumulate. We're looking at this as an opportunity, not a end of the world event, like I saw a lot of people cascade. And it's so important to be a technical analyzer and understand the charts, because all the noise will be very much quietened down, like what we're doing with you guys right now. So this is Bitcoin. And answer in the comment section, does this look like a good or a bad chart? Does this look like an uptrending chart, or does this look like a horrible chart? To me, this looks great. Still, yes, we'll talk about altcoins in just a second, but even them don't look too bad. And that was not proper English that I just used there. You know, yes, okay, bit of a sort of not the prettiest of ranges up here, but generally, when you look at Bitcoin on a broader time frame, we have broken out of here. It still looks good, and it's still very much marching its way to the target that we had. And remember, this is an area where you would expect volatility for Bitcoin after breaking its all-time high. We are a few days away from the halvening. You're going to have miners that are going to be dumping because they're going to want to be reaping the profits that they have thus far. You've got a whole list of things. You've got tax season, you've got readjustments on the macro. We're not going to get into that. We've covered that in previous videos. Equate everything into that picture and then look at the Bitcoin chart and tell me you're bearish, in all honesty. And if you come into that conclusion, you aren't even looking at the charts. What you're doing is following news headlines, and you really are caught up in that storm. You're not learning to dance in it through having a roadmap and a map of it through technical analysis. Let's talk about total too. So this is a chart that we're probably more zealous on than we are Bitcoin, as somebody like myself, who is the majority in altcoins. Okay, I have a very small amount of Bitcoin, even though we were some of the first people. I think I don't really know anybody else that was calling at 15, 16K to get back into the crypto markets back at 2023. So we're used to volatility since we've been there with altcoins. You know, the interesting thing is we're majority in altcoins, and this is the altcoin market. So this is total to everything excluding Bitcoin. What we're essentially looking at here is an inverse head and shoulder forming, and actually you haven't ran the low of the left shoulder, which is a very good sign that it's stopped there. Doesn't mean that it's not going to, it just means for now, this plan and our broader plan is still very much intact, just like what we've looked at with Bitcoin, regardless of the news that we saw yesterday. So important to subscribe to a channel like this, guys, not the ones that are just going to feed you whatever they think is popular at the time. So I still think there's going to be a little bit of fallout. Certainly the market's opening. There's likely going to be contagion with the broader markets on Monday, without a doubt. There's no way there's not going to be. Bitcoin, crypto really bore the brunt of it. It's interesting when we look at, to go back to Bitcoin against a couple of other markets. So Bitcoin against the SPY, we were expecting a pullback for, and it's still having that, but still actually doesn't look too bad. I think markets are going to have their turn at sort of capitulating a bit. And, Bitcoin coming down quite aggressively against gold, but could be setting up a real big pattern. We've got smaller patterns that have been made along the way. I don't think there's too much reason to panic. I mean, BNB very much nearly made it. We've got loads of things that are very much progressing. And when you take this approach and zoom out view on the markets, it helps. Yes, and believe me, guys, the beautiful thing about me is I'm right there with you guys as a crypto investor in the tokens that we talk about on this channel. So I'm living it with you. And we can give insight, and somebody that's done this many times at this point and lived through these exact moments, in fact, even worse moments, we can offer as a stable hand, hopefully. So generally when we assess the markets, they don't look that bad. And you're going to say, how can you say that Allincrypto? But when you take a technical look, you can see where we're at. And people say, okay, well, but this altcoin is down this much, or that altcoin is down that much. This is what altcoins do, ladies and gentlemen. You want the high returns, but you're not really willing to deal with the risk that comes on the back end of that and the volatility that comes on the back end of that. That and those amazing returns that is offered nowhere else other than the cryptocurrency space is great, but you have to factor in the reason that you get those returns. It works both ways. Understand the nature of the beast that you're dealing with is very important. It's a saying that we throw around on this channel consistently, because it's so important to understand the game that you're getting into. People have got unrealistic expectations when it comes to crypto. Yes, it can offer these amazing gains, but they think it's just up only. We've given a lot of price predictions for a lot of altcoins. We're going to be covering all those in the week ahead, seeing what ones are intact, what ones aren't. That doesn't happen overnight. And we've given those price predictions, which people thought we were lowballing, till the end of the year. So we've got plenty of time. April, May, typically not the best months, certainly after your sort of April hump of earnings for the markets generally. There is a seasonality to markets. There has been always. In fact, it was the agricultural markets that were kind of leading that to begin with. But generally, we take a zoom out approach. Things don't look that bad. We still think our broader plan and trajectory is in play. I'm really looking at the dollar and a number of other things. What I want to talk to you guys about and recap on is what we looked at yesterday in regards to the fiat systems fighting back. So it's very interesting to me, and we're staying as non-conspiratorial as we possibly can. It's very interesting to me that you have the fiat systems very much coming undone at this point. And you have the anti-fiats, the category of assets that are an alternative, and Bitcoin is a part of that, doing well and diverging. So gold and essentially bonds have moved together. And why is that? Well, I'm going to show you, because there's been a constant bid behind bonds as they add the amount of bonds into the world. M2 is the baby blue chart that we've got for you. Gold is in a nice Bitcoin orange. I'm going to change that to gold to not confuse anybody. My ADHD and OCD is just going crazy looking at that. Let's get a bit of a darker one. So as they've continued to increase the money supply by issuing new debt, they've had to continuously buy it and hoard it. And recently they haven't been doing that. And that's why you've ended up with this divergence of the bond market. We have the yields here, but I've flipped the chart upside down just to really confuse people. And then you've got gold. And the reason this is happening is because the Fed isn't stepping in and buying bonds here. The market isn't also, and it's looking for an alternative, because it knows the Fed has to be the buyer of last resort, and they're not doing that right now. I do think they turn back and start to do that, and I do think that's what sees liquidity cycles and all our price predictions for crypto and the broader markets play out, like Amazon, for example, which we've still got that higher target for, that people were in disbelief about because Jeff Bezos was selling, and we were saying, nope, it's going higher, and it has. So gold is basically saying, okay, they're still issuing all this money. Remember, we've looked at that chart in regards to the Treasury and what they're doing in regards to liquidity and spending, and it's kind of null and voiding what the Fed's doing in terms of QT. So QE is kind of outpacing, or stealthy, whatever you want to call it, outpacing QT. And you're getting this real divergence and kind of exposing of the fiat systems. And gold, on Friday, before all of this kicked off, went on a ripper and then was heavily defended. And we actually have confirmation of this in regards to the paper markets aggressively shorting gold. Who is shorting gold when the chart looks like this? You have a massive macro pattern playing out. You have a bull flag in play and an inverse head and shoulders. And we, since we gave that, have marched pretty damn close to our target. Who's shorting gold like that? It's not investors. And then we have all of this cascade over the weekend. And actually, if we look at Pax Gold yesterday, daily candle, forget the weekly. When does gold move 40%, 50% in a day? And there's a defending of this, the debt-based system, which is a broken one, and the alternative systems. This was going on the paper markets. This is really interesting. So this is gold, silver, pros. I'm not sure how anyone can call himself a gold, silver pro, but I really don't know. You know, he's obviously knows what he's talking about in terms of the gold and silver markets more than I do. A nuclear explosion on short paper dumped on both gold and silver before Friday's close. Why was this happening before Friday, given the news that we've just seen? They cannot allow $30 silver and $2,450 gold close, or all hell breaks loose in both bonds and the dollar next week. It's the free market again, them for all the marbles. And you can see this. This is what concentrated gold shorting looks like. Why was that happening? So there was a rush to defend this. And actually, that looks like a bloody short squeeze to me. We're kind of putting our neck on the line talking about all this, because really, I genuinely believe that understanding markets is going to understand life significantly better. Because everything is so financial, you can see the insiders doing what they do in the charts. And it's very interesting that all this occurred, and you'll be able to recap on yesterday's video, before what happened going into yesterday and over the weekend. Is there a correlation there? Is it just a coincidence? I'm not here to really speculate on that. But this is very interesting, and potentially the fiat system's fighting back. There's a huge divergence. Our bias is that this turns, but this is going to go with it. So this being yields, but a bond representation, because the Fed's going to have to step in and be the buyer of last resort. I am still not in the spike interest rates camp, because even if they spike interest rates, it doesn't matter. It's the QT that would bring would still be QE, in the form of the fact that the burden of debt that you now have, the system is broke. And this is why that divergence that hasn't been apparent for years and years and years is now here. This goes back to 2007. We don't see this. And actually, historically, looking at bonds and gold, yes, okay, there are areas of, let's put all of these on auto, discorrelation, but generally there's not. You don't get this. So there's a lot of really interesting things going on. To kind of wrap up and summarize all of this, I want to just play you guys a clip of Larry Fink talking about what's going on here more broadly with crypto. Even though we aren't Bitcoin maximalists and we clown the Bitcoin maximalists who say you're honestly an idiot if you think that the only application for a distributed ledger is Bitcoin. It's changing the world. It's amazing how this industry finds itself at the convergence of most industries, and it's kind of revolutionizing them. But I want to replay what Larry Fink said not that long ago in regards to crypto, why he thinks his clients needs it and why the world needs it and what it is. And we see that taking place with gold and kind of an escalation of things. And he's talking about the Israeli thing that happened a while ago, not the most recent one.
From clients around the world about the need for crypto. I mean, when you think about, I think some of this rally is way beyond the rumor. I think the rally today is about a flight to quality with all the, all the issues around the Israeli war now, global terrorism. And I think there's more people running into a flight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
So I'm going to leave it there, guys and girls. I really just wanted to get on and make a kind of more personal video, I guess, to take a zoomed out look at the charts, kind of where we're at. It sounds crazy given what's taken place over the weekend, but I still think we're on that broader track and that broader trend. I really do. And I think when you look at altcoins, some of them don't look great at all. Certainly in regards to running lows, but I think when you look at the overall cryptocurrency market and where it's heading, they're likely going to pick their feet up and continue in the direction that we assess that they're going to. But of course, make your own decisions. I know some of you would have found this very hard. I've been there. But it's a case of weathering the storm, in my opinion, and understanding the broader context and trend of things, and that we live in a proliferation game and you need to game that system. And one of the best ways to do it, in my opinion, is with the cryptocurrency market. So that is really all I've got for you, ladies and gents. I'm hoping you all have a smashing Sunday, and I look forward to seeing you all in the next YouTube video. Thanks a lot for watching, guys. See you in the next one.